Hello, 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 everyone! Swimming in a sea of pre-market red. How is everyone doing today? Hey, hey, waka, waka. We'll see if it's a flush day. Setting up for potential capitulation, but we got to get a lot lower prices than this. We had the CPI, huge miss to the upside. Well, I'd put it in a pretty substantial miss to the upside, especially from the core. Especially from the core. Georgia's 3% Thursday. We're naming. I like 3% Thursday. We might. Now, if we get a reversal move from these levels, it would not be a capitulation. A lot of people would call it a capitulation. We'd see some follow through to the upside. However, it would not be an official capitulation move. This is not bad enough yet. This is not down enough yet. So we'll be watching for that. By the way, going into the day, if you do get a reversal, measure out the harmonics on today's bar, and if it closes within the upper 12%, that is a very bullish reversal bar. You can get that without capitulation. Oh no, don't bring up tendies. Please don't bring up tendies, George. Let's see. So, good morning, Patrick. Good morning, Sashi. Good morning, Gary. There's a slim chance that we're not. I doubt we're doing 100, but it did change the pricing. We'll get to that in a second. Good morning, options 22. The harmonic extensions really pegged a down move in Russell on the daily. Interesting. VIX has been down all morning after number buying. We could see some buying pressure coming in, but again, the event is out of the way. We're naturally going to get the drop in the VIX unless we have a major push after the open. 10 years back over 4 to 30 years closing in on 4%. That's going to get interesting. Good morning, Connor. Looks like a reversal day after a flush. So we'll get Bob's thought if he can jump on. He had a TV spot right at 9, but let's get through this. I mean, everybody here already knows core inflation. I'm going to have to try to live stream some of these closer to when the numbers released, but we'll try to work on that if we can get some more support for the channel. Core inflation 6.6 versus 6.5. Inflation rate 8.2 versus 8.1. By the way, there's nothing in the jobless claims. I know they were secondary, but there's nothing in this that said, okay, there's something going on in the job market that would contradict their narrative for hot inflation, keep hiking. I just wanted to get that out there. Core inflation month over month, higher than normal and tied with previous, coming in higher in forecast. And inflation rate, non-core headline number, 0.4, beating the previous and higher than forecast. And that's pretty much it for today. I will be paying attention to the auctions, why we are in a more fragile market environment right now. Also, based off the liquidity with this number release, it sucks. It sucks. I can't figure out a better way to put it. The depth in the futures contracts were yes. Again, it's not going to absorb all the selling pressure, but it was horrible. Horrible, 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 horrible. Also, treasuries, it was getting interesting even in the treasuries. Will today be the day that breaks something? No, but if we get an unexpected event coming up, the depth is just not there. Something could snap. I'm actually shifting into the something could snap camp. Not today, not necessarily tomorrow, but the something could snap on an unexpected global event. Also, now we finally have the default swaps climbing up more so in some key areas. So pay attention to that. Stock market map, red pre-market. FOMC, I refreshed this a few minutes ago. We got that 75 baked in. The 100 is creeping up. Very doubtful. They'd probably do 75, 75 instead of 100 anything else. So that this is now baked in. This was the last major release before the 2nd of November release. All right, still in negative gamma. Remember, volatility to the up and downside. We are now well below that gamma at 30. Well, no, we're right at it. We're not well below it. If we sell off into the open, we will be below it. But pay attention because that 3,600 gamma we're trading around is massive. So we can get very interesting volatility moves. Fear and greed still at 19%. If Bob jumps on, we'll take a look at this. But my take from this, with energy being back up, this is going to shift in October. So even if a couple other things come down, you can have it stick in through the especially November prints can be high or higher than expected. Now, remember, we can still get that base effect. We did get earnings this morning. That's getting overshadowed. We'll have to jump back around to that. Just wanted to get the, by the way, this doubles potential is virtually off. It is off officially. The next key area I was focused on, the little snap down. I was like, what? Here we go. Here's the key level, by the way, that I was keying in off overnight. Boom, 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 boom. Release. Right down below that 35.89. These are the kind of things with this volatility and this liquidity, you have to have automated trading stuff set up, because essentially once you are filled, even with slippage at a predetermined thing, I like to take off a partial of that and lock it in, and it's automatically executed, and then you can manually move stops. Just a little stuff for advanced. So we had this already. You can go back. We were looking at this 309, little spike below there to 306. But so far, this is the area. This is why I love the harmonics to set up for key levels. Now, don't pull off your harmonics just yet, because if we start getting a snapback, first area I'm watching is 350.40 to 350, 35.40 to 35.49. Let me pull this off. So do remember that right now. I'm using the harmonics on the sell-off move, and look at that. The 35.40, 35.41 is a 25%. Now, we need easily to get it into a capitulation day. We need to push down into the open. We need at least a drop below 34.77 area. We do have some minor harmonic at this 34.92 to 3500. So going to be watching that. And then we'll be paying attention to the market internals. So how is everyone doing? Let's see. Yes, we could have the reverse after a flush. Remember, we need substantially more push down in the open on prices. So if you're from my models, so people can have other models, but that would just be a short-term reversal bar, not a capitulation move is more of a midterm. And we're getting there also from the reaction that there was no pause or pivot talk. None. Everyone was just like, people like, oh, well, guess the Fed's going to keep going. There was nothing else. All right. There was nothing. There was none of this. Fine. Let's try to spin it. So we got some giving up there. So if we do get a bounce back move from these or this 3,500, a lot of people would probably call it a capitulation reversal. It would not. It would be a short-term reversal, but not a capitulation. Capitulation would be more medium-term. NASDAQ real quick, and here's why I love the harmonics. Again, we had these numbers sitting up last night. 10,526. Yes, we're not trying to call the low tick. You don't want to call the low tick. Why don't you want to call the low tick? Because you probably won't get filled. You want an area where you're going to see some trading, some potential support and some trading back and forth. Since it sliced through, 10,646 is key now on a bounce with this single bar move. So I'll be watching 10,626 to 10,646. By the way, keep an eye, if we do start bouncing, watch the 15-minute later in the morning. Watch the 5-minute going into the open. This is also off the table. Off the table. Remember, potentials. We finished with the probabilities on the Dow. On the Dow, probabilities done with the return to the 85 to the 100. So that is done officially. But Dow still holding. The Dow is still holding back above here, and the potential double still on. Now the next levels, if we do break below this 28,635, 28,4, 28,166. We'll be keeping a close eye on the Dow this morning with this 28,635 to see if we can break that. Russell also finished its probabilities. The potential double still on the table. The next levels for the Russell. Here's your key area to use your reverse harmonics. Reverse E harmonics. Let's just get down to it. So, going to be paying attention also in the Russell, not only to 1647.50, but you still have the June lows 1640.70. So there's a key support zone. We start trading below 1640.70, 1630.60, 1613.8. Let's see. Before we get 34.50, watch 34.77 area. Thanks. Thank you, MJ. Again, changes to the channel coming up, but long-term people, do not worry. I'm going to make it work on making it even more entertaining. So, morning dew. Yeah, okay. Let's come out of the bomb shelter to see what's going on. Margin calls may ring. There could be some, but that's where you got to peek in at the longer term stop. A lot of stuff, see Apple still holding up. There's down pre-market, but we start flushing below June lows, not necessarily today. That's when I will get more watching for the margin calls like Apple. You know, Tesla will be interesting though. Tesla 208. So if Tesla can start getting this flush below about 206, 207, it could get interesting from a Tesla perspective. Let's just peek in. Let me get to the yield curve. Maybe Bob will not be able to jump on this morning with, you know, he's in high demand with the TV spots. 30-year pulling back a little, but closing in on that 4 basis point move. The 10-year punching up 4.06. We have 4.076 as the next harmonic. Today's high was 4.075. So that's already established a little key there. Next push up here is 4.113 and major. What could this still? We could still return to 4.282. The 10-2s. The 10-2s. Breaking down from my favorite pattern. Sarcasm there. The triangle pattern, but retesting a significant level at minus 46. So still no substantial push. Remember, once we start getting the real substantial push higher, prepare for market turmoil. All right. Is that all? Yes, Christoph, 75 basis points it is. I can't get through all. Yeah, the US dollar, Japanese yen still watching for now that CPI is out of the way, because there's a lot of the global world looking at our CPI because it's going to, with the dollar wrecking ball. I got to get to that too. 147.84, closing in on 147.84 to 148.59, but I am prepared for potential Japanese intervention, especially when they reopen. What's interesting is now the prior breakout level, the prior levels they started intervening at before are support now. That's what's so funny. So an intervention could potentially just take us back to support unless it's massive. I talked about the dollar wrecking ball. Dollar wrecking ball through the 875, still targeting the 87.5, 114.08. The dollar wrecking ball. But now, what does this lead to? We do have, I just got to put it on there early. Does this mean we get bearish? No, no, no. You do not step in front of the dollar wrecking ball, but we do have a potential longer-term topping pattern. So if we saw massive global intervention against the dollar, we could see something like that, but we'll have to keep an eye. There's nothing on the radar screen for that, but got the pound interesting. Still was trying to rally, pull back now, but the pound with their gilt buying program, they're temporary. Let's see if it's still temporary. Ending tomorrow, the euro hitting that 75. So technically, you do have a potential double in the euro. Still watching for that 87.5% targets. Bitcoin still holding key support. Still holding, finishing that minor return to the 75, but still, until we get that flush out move below 17,567, then we'll tip to the super bearish. Where else do we sit? Waka Waka 10-2 on the NASDAQ for the move. If we do, I'll give you the next major levels. If we do, wow, if we do break below here, would have to be the intermediate harmonics. We could do a little pause here. These are not going to be the best levels, but they will give me the levels. Again, we have another cluster. Wow, let's see. Let me look at this weekly. We are going into a pretty big void. If we start breaking below 10,425, 10,4, there are not a lot of stopping points. The next harmonic isn't until 10, right in front of 10K. That's what's interesting. I will put these down. Now remember, we are well below that weekly on the S&P now. So that is resistance. Below this 34.77, not much till 38.82. And remember your key resistance becoming support from back at the October 20. Do not ignore that, but we are now below the 200. So unless we can regain that, it could be very, very interesting. The next major level is not till 33.82 in the S&P. We're into areas that there isn't a hell of a lot of support in here. There isn't once below, because here, look, once you get below this 3,500 area, you're into this on a weekly basis and on a daily. This is where it gets very interesting. If we don't get the step in buying, and here's your daily. Here's your daily. Look, you got a clear path move here. Here's that green line I have on the screen. You got a clear path move. Yes, you have a couple minor points, 34.27. You don't have. You got 33.11 is very minor. I'm going to mark off that 33.11, by the way. Not for, see this? This is why pay attention to this stuff. So this is what I'm talking about. See this green lines? That's now you can see there's not a lot. There's not, I'll mark off this little minor area, but there's not. This is some minor significance right here. We got a key close, 33. There's your 4K. But that's it. That's what, that for the concerning price action to the downside. Look, I mean, you start dropping below the 34.77 harmonic, and not just for today, because we remember we can get a flush out move for more than today with it below the 200. So unless it can regain that 200 today, it could get interesting for follow through. Cash is not trash. Rams of Fall still in 100% cash. Hey, cash is a trading position. It's waiting for long-term opportunities. Good morning, Lauren. So, this is not a major Mr. Yuck yet. Below 34.77 starts turning into Mr. Yuck. I like this. We have new terms. We still have the Mr. Yuck. Hold on one second. Let me see here. Just had to deal with something. Who else? Are you not entertained? Well, I am entertained. So, Ted's entertained. Tesla's going to have major margin calls at 202. I mean, you got that. There's a key line to stand. That's going to get interesting for the Tesla players. Didn't 2-year hit 4.2? By the way, if we do start I'm going to be tuning in on the tick. If we start getting buying pressure and a snapback rally, I will start watching for the gap fills in some mega caps or partial gap fills. The 2-year hit 4.535. What did it hit today? 4.535 for the 2-year. George, let's go capitulation. All right. First of all, we'd have trading halts before Tesla went to 133. So it's not happening today. Gary's buying Tesla at 30. Where are all my Tesla bulls in here? Love Tesla at 30. Can we check the SPY? Let's check the SPY. Let's check some stuff. Gap down. Where were the next? By the way, this is off the table. 3 on the push down, 347.79 and 346.40 are my key levels. 351.44 turns into resistance on a more substantial rally. And remember, do your gap fill harmonics. Maybe I'll stick on like a couple seconds into the open. So we got this. I'll get to the cues. Let me just jump on this. This is going to be an approximation. Where are we pre-market? 349.13. Here. Bob's going to be joining us, so we'll have to stay a little into the open if he can. 353.77 right now. Let me just get right to it and hit the Magic Bob button. Who can join us? We've got the Magic Bob.
Where's the Magic Bob button?
With these CPI numbers, Bob, pivot or pause?
This is a horrible number. Can you guys hear me okay?
Yeah, we can hear you. Can everybody hear Bob? I can hear you.
I can't see any comments because I just joined. Unfortunately, this interview that I agreed to do went long. But look, I'll just go right into CPI, and then you guys can either keep talking about what you were talking about or whatever. This particular CPI number is horrendous for the markets and for anyone who believes that the Fed is going to pivot. I still believe the Fed is going to pause. The CME Fed Watch tool, as I'm sure Mike looked at, jumped up to 98%, and now it's fallen back to about 93% in terms of 75 basis points. And my last check, they still had not priced in 100 in December or 100 in November. So the market still believes that the Fed is going to do 75, then 50. Where's it at right now, Mikey?
Let's see. Right now, well, everybody's refreshing.
Yeah, you can't even keep up with the refreshes.
We're at 98.6 for the 75, 1.4 for the
100 now.
We're 100 is on the screen. I personally don't think they're going with 100. I think they do 75,
no.
75.
No, they're going to do 75. And look, there's a couple of things. One of the people the people that just interviewed me actually said, "Is this an overreaction? It's only up 1/10." I think you could guess which political side these people are on. It's only up 1/10%. How is that a big miss? Blah blah blah. The problem is the core. Okay, the year over year core ticked up versus expectations, but it's up 3/10 versus last month. Okay, that's a big jump for a core year over year CPI when we're supposed to be starting to see the base effects start to trickle it lower. The second thing is medical was one of the largest gainers, and medical will not reverse. Okay, when have you guys ever seen any sort of medical or medical insurance have deflation built into it? Okay, it just doesn't happen. Number three, the core month over month matched previous. So if you take the two together, the previous estimate on the core month over month was up 0.3. It came out up 0.6. This one was up 0.5. It came out up 0.6. That's two estimations for a total of up 0.8. The total was up 0.12. Okay, that's a big jump. So at my last check, the 10-year note was up about 16 basis points and it made a new high. If it closed here, it would be a new high close on the 10-year note. The 10-year note was one of the things we saw coming off. Okay, and it was really the 2 and the 3-month and the 2-year and the 5-year that were either holding steady or even coming off a little bit, which is why we saw a little bit of trickle off in that sort of 2s, 10s inversion. Now we're back at about 44 basis points on the 2s, 10s inversion. Now, I don't have live stocks up right now on the open. I suspect they're still doing poorly. A comeback today would surprise me. It would very much surprise me. Probably not going to stay on the lows, but if stocks finish positive today versus yesterday's settlement, that tells you that the real market participants, what we talked, I think it was, I don't remember if it was Ted or Waka Waka or Teddy Ferrari, I don't remember, but one of those guys asked me, why is institution called smart money or bond money called smart money? It would be smart money buying it because the markets have really priced in all they're going to price in. And this is nothing new. So.
All right. Yeah, this is going to get interesting. So you don't think that we'll get a big snapback rally today?
I don't think so, but it certainly can happen. It's not something I'm going to put, I'm not shorting it. We certainly could. Again, especially because like you put up and you don't need to put it up again, but you put up the expectations for the CME Fed Watch tool, and it shifted from expectation of 50 versus 75 to an expectation versus 75 or 100. But 100, so tiny, so minuscule, they're not doing 100, in my opinion. And so we're basically in a situation where market expectations haven't really changed. So you could see an equity snapback based on that, fundamentally speaking only, right? But there were a lot of people, I think, that were starting to position themselves for a weaker CPI. And I told you guys yesterday, if we got a weaker one, I didn't think it would be much weaker. The PPI was stronger. We talked about the PPI bleeding into the CPI. There's a lot of reasons why we wouldn't snap back, but it certainly could happen. Like, I don't think the NASDAQ's going to end up down 7%. I don't think that's going to happen at all. But if we turn positive, it would surprise me.
Yeah, well, it would. Let's see. Where do we have to get positive from yesterday's close? Whew. Then that would be a snapback.
That would be a snapback. And if that happened, the low's in. To me, the low's in.
What's interesting, without a little more push down, we don't in the models I follow, we don't have capitulation yet.
No, there you go.
This would not. Now it would be a short-term bottom, but it would not be the medium. You know how when you get people just throwing in the towel, it's more like a medium-term bottom. We'd hit a short-term potential on a reversal today, but not a medium-term. I'd rather have a medium term. Medium
Yes,
term
I
makes
do.
it a little easier. Short
I
term,
keep I keep saying I want to see it. There's so many things I want to buy, and I'm sticking to a positive fourth quarter. It's getting further and further away. Where would I have to go, Mike? Put up a monthly, please.
but Bob, I based off your comments from last week, I took all my money and put it on the fourth quarter bet.
You're still fine with that. Your stop needs to be the open of the first quarter being negative. That's your stop.
The open of
Doesn't matter how negative it is. Wow, this is getting to be a higher and higher bar here.
to get to a positive first quarter. Well, we got to take out 38.20.
Okay, it's looking not so smart.
Your key problem is even on a snapback rally, 3,800 is major resistance.
Of course it is. Of course. Why would I make it anything else?
Why? See, but I've already given caveating it to people. I'm like, Bob could change his tune at any point given further information. You're like the Fed.
What, Lauren? What did you take profits on? My call? Because there were no profits on this.
So that's where you know what? Because you're one of those. You're one of those TV guys. You can pivot at a moment.
I can say whatever I want. It doesn't matter.
That's why I said Bob is not a trading strategy. Bob's a.
I'll tell you guys something. The guest we have on the podcast this Friday, Nancy Davis, she has an entire thesis on inflation. And we were supposed to have her in December, and she was like, I need to be on sooner than that because I need to tell this to people. So even if you don't listen to our podcast on a regular basis, I think you're going to want to check that one out.
George, oh no, George, my entry is Bob and my exit is Bob. Oh no,
you're just so.
My stop loss is Bob. Oh, Bob is definitely my stop loss. Bob is my reversal trade.
Oh my God.
Oh, this is what. Yeah, the tick was at minus 1,800. That was a major. We had some sell programs kick off on the open, and so far we have not. The tick bounce back is still the what? Negative 650. Oh, so we still have some pretty.
What's the symbol on that? What are you looking at?
That was the tick, the NYSE cumulative tick. Which, if you're on TradingView, is tick. Is on most platforms, it's tick or it's $ tick.
For some reason, it gave me a line chart. And that's weird.
Well, go to 5-minute because you might be on the daily. You gotta.
Yeah, I always default to the daily.
I mean, this is this is
wow.
Until we start seeing some prints closer to zero. Not interested in trying to call a bottom in this. And so far, this fits into an exact sideways correction with the 5-minute rotation zone catching up. Mm. Oh, boy. Any thoughts on crude?
Oh, God. I told everybody I covered my crude short, but I still thought the downside was more likely than the upside. And I also told everybody I thought 65 was coming before 100. Bold call. But I still think that. I just think the demand weakness is way too pronounced, the potential demand weakness. And again, Biden, not even Biden, the energy secretary is like, this colossal cut in production, it's about 800,000 barrels because they were already underproducing from their quota. So really this 2 million barrel production cut caught them up to where they were actually producing. By the way, natural gas in Russia is now being sold as LNG. The Nord Stream is shut down, but Bloomberg put out a story today about Nord Stream is shut down and Russia just opened a natural gas refining facility and they just shipped a tanker to Greece, which last time I checked is part of the EU.
Oh
Let's not
boy.
worry so much. I
Oh,
got to ask Christoph about that next time we see him.
I had a question. Christoph's
There's
putting
Mary Jane. Mary Jane is in here.
Mary. Oh boy. Now you got the Tom Petty song stuck in my head.
Mhm.
You know. Uh oh, Lauren with a super sticker. Thank you so much, Lauren, a longtime supporter of the channel. Let me just get to, we got asked for Q levels. 255.24 was already the harmonic. This is why I love harmonics. Look, we already had the harmonic on the chart, 255.24. Next one, I don't have anything besides short-term harmonics till 250.42. Key resistance now 257, 257.12, and 258.14. Gary also with the super sticker. Thank you so much, Gary, long-term supporter of the channel. Mike, do you ever watch the Trin Bob for intraday?
No, I never have.
I do. I do repeat less. Yeah, for anybody wants to know, it is Trin.
What?
Oh, I had it on.
Next time.
Trin.us. Isn't it? Where is it? There it is. It's the ARMS trading index. Yes, this is one of the times it is erroneous because it's based off volume. This would normally be a super bullish push down, but with the volume skew, this is a contrary reading. Okay, so watch the trend of the trend if you're trying to learn that one.
Trend of the trend.
The trend of the trend. We've been covering some more stuff in here. So let's see. Yes, this MJ's. It's his last dance. Look at this. Connor with the super sticker. Thank you so much. And it's Patrick. Well, we're getting some. We got to show up on the opens. We got to have disaster CPI readings all the time, Bob.
Patrick is getting a mafia name for that. Actually,
Patrick. All right. What's Patrick's mafia name then?
Patrick Mucho Gusto Musto.
Mucho. I will never remember that.
You have to remember it.
Anything else on your thoughts or radar screen? Our tick finally, we're getting back to positive, so we might be putting in. We have not been able to break into the open, so at least we have a line in the sand going into the open now. We start breaking and retest 35.20. I'll watch for the slightly bigger pullback, but this is key. So now we have a major line in the sand that if we start breaking down, 3,500 has held. So that is the key line. This would not yet be capitulation move.
Not yet there.
All right.
All right, guys, I got to go. Any questions for me before I jump?
No, will you be on this afternoon for a recap?
Of course.
All right. Well, then we will save our questions for Bob this afternoon.
And this afternoon, Lauren gets his mafia name for the super chat.
All right. We got Connor. We got Gary. Did Gary get a name yet? We got Gary.
Gary didn't. Okay, so we got Gary, Connor, Patrick got his. All right, I owe you guys 3 mafia names this afternoon.
So you're gonna have to tune in. Did Lauren get a mafia name?
No, I'm doing Lauren, Gary, and Connor this afternoon.
Patrick. All right. Perfect.
All right.
Thank you, everyone. Thank you, Bob, for stopping on even after the open. All right, everyone. Again, thanks for wishing him again. Oh, I'm secondary. Really watch for this. We got a pretty solid line in the sand, this 35.20 area. I like to watch for the break, and it doesn't have to be a full retest, but that we finally got the tick back briefly above zero, but nothing sustainable. So in order for me to get bullish, I need some sustainable. This is just a recovery, a reaction right now. Oh, wrong thing. This is just a recovery reaction right now. Is there a strong signal? No. However, we start breaking back down into these low 3,500s with negative tick again. It's bearish mode. Remember 34.94, 34.92, and 34.77. That's where we sit, just checking in across the board. The NASDAQ, the key level I would be watching is 10, the harmonics 10,549. I'm going 10,550 because there'll be round number orders there. That's going to be the rally point. And the breakdown point, we could actually be getting there closer now. Will be this 10,507, then confirmation with 10,5. Just going through one more. The Dow. Still, we don't have. Remember, the Dow is this 28,635. You start seeing a flush down move below that. That could really hammer the market. The Russell. I don't like to put up the multi-chart view on this because it gets too small for people on the live streams. However, the Russell has officially taken out the September lows on an intraday basis. 160.40.7, 160.43.8. So still, we have the June lows holding. So you still have two key areas to confirm. This is where, little teaching moment. On any breakdown in the S&P and NASDAQ, which we do not have, I need confirmation. Even if you don't trade the Dow and the Russell futures, look for confirmation. If you do not get confirmation, it could be a fake down. Not a breakdown, a fake down. I need confirmation. These are the two that are holding up. This is a great little moment where you can use other market confirmation. So Dow and Russells are the two things you'll be watching for confirmation. The Dow would be a break below the lows from Monday the 3rd. The Russell would be a break below the Junes. This is the kind of stuff right in your notebook. These are the kind of days, and this is true on upside key level breaks also. I want to see, to avoid getting sucked into a fake out breakdown, a fake down, I want to see confirmation across the board. There, that was worth the price of admission today, that little thing. So we're still, all right, now we're starting to get some tick coming in with the market holding. So this is where I will now set an alert. I do it on my other trading platform, but I'm not going to disappear from the screen once again. Here's where I like to set another alert. So I can watch if we start spiking back below 1,000 and can't sustain any upward pressure here, and we start breaking down, I want to know that. Other than that, sideways correction, burning off the oversold conditions. I'm going to watch for that reconnection at some point. Remember, two ways to reconnect. All right, now it looks like we're getting this breakout play with the positive tick. So going to watch for this now, this 3520 to hold. Going to watch for this 3520 area to hold with the ticks holding up. We need this tick to hold up, though. This is only for a short-term bullish play, aggressive short-term bullish play. That's the way we look at it. Now I like to scan through. Normally I'd have all these up on the because I want to see. All right, NASDAQ, this 10,550. Hold on. The Dow, still trading below its key resistance. So I'm going to want to get confirmation for the continued. The Russell is at least short-term resistance, but remember, this is for reconnections with a 15-minute rotation zone only. All right, I'm back. Sorry about that. So this is how you assemble stuff going through your majors to watch for confirmation, because again, you don't really want in this move, in this kind of market action to get stuck if you don't have broad market participation. Hope that makes sense to everybody. And here, see, now we jump to the tick. See how the tick's now sustaining up. So now I'm going to mark, this is something else. I'm going to mark a little higher level because now I don't have to pay attention, but we start getting a spike back below 500 now. We'll be watching for topping patterns to come in on a short-term basis. Because this is a zone. Remember, we're into a clear path move. So we have to look for other stopping points. Well, we got the 25% harmonic with the 5-minute rotation zone, 50, 35, 37. And it's closing in with the 15-minute rotation zone. So this is how you, and the prior harmonic, remember we left on the thing, 35.40. But now I don't have to keep clear eye on the tick. And hold on. Hold on. Also great times for doing this stuff to get stops to break even, to take a little bit off, to get stops to break even. So now, all right. So now it's just managing remainder position. That's the kind of thing you're looking for. Hope. So, again, this is just a counter trend bounce so far. With that, I'm going to wrap it up. Let me know. Thanks for all those. Let me know if you want more stuff like this or if this goes on too long and you can't do what you need to do into the open, because then we will modify. I'm just trying to figure out. We're getting more people tuning in. We're looking to help more people with the key analysis. Let's just want to peek in since we're getting that snapback. This is where, you know, we start getting Apple above 136. Short-term little bounce play, 136.33 to 136.82. You start getting at least a 15-minute close. 5 would be aggressive in this market, but 15-minute and not necessarily for today if we hold these lows. But then that's my next key area, 136.82, especially if we get a really decent snapback rally. Then we just have to look. And you have some minor resistance right here at this breakdown zone. Let me lower it here. This will be more where people are watching. And then we're going to look to see how that fits in. And look at this, 37.5 harmonic right there. So this is a very key area we're trading at right now. But we come back, that turns into support. That's just key levels for stop for a potential gap fill, especially above 136.82. Well, we got to just keep the channel growing and figure out how to monetize more of this because it does affect trading. So other than that, so that's the way you're doing some analysis on an individual stock. Then I'm going to wrap this up going in. So with the Qs, we've held these levels. Just same thing. We have the strategy. And we have the prior harmonic 258.14, 258.75. So this is going to be a key level and the 50% harmonic from the gap fill. So this is going to be a key first target for any plays on a short-term Qs. I got to jump back to the S&P. All right, there we go. Reconnection with the 15-minute rotation zone. So that would be moving up stops again. And still tick staying positive. So still got the alerts. Still got the alerts for a major rollover in the tick, a minor and a major rollover in the tick. All right, I'm going to wrap it up for now. So in this, we'll be watching for some kind of short-term topping pattern to come in now. With that, everybody have a fantastic trading day. That's struggling at the VWAP now. I got the VWAP right just overhead on the, yeah, it's right there. So we've got to return to the VWAP, which for the people who know how to use the VWAP, you need some building base above the VWAP to start targeting higher prices. So right now it's about 35.48 or 35.47, 35.48 in the S&P, but you don't just, it's not a brick wall. It's an area you want to build support above for the continued bullish move. Right now, we have a little short-term reaction there. Have a great day, everyone. Please tune in after the close and we will do a recap. And Bob will be back on. Again, thank you for the super chats.